This is our Forex blog for April 12th, 2011. And like most days, we really want to find which currencies are strong and buy those against the weaker currency. You can see the dollar and the yen both, had a weekly and monthly trend that was down. The yen had a weaker monthly trend, but the weekly trend had shifted to up. And so therefore, when you see weakness on both of them, because the dollar has no extreme strength on the daily trend, and the weekly and monthly trends down, it's a safer play. Which currency is the strongest to trade at that time? The Swiss, the weekly trend's up, the daily trend's up, the monthly trend's down. The euro has, or earlier last night had a daily, weekly, and monthly trend that's up. The weekly and monthly were up. So, and we all know that the euro's, been a lot stronger than the pound. The New Zealand and Australian have also been relatively strong. So I would be looking for buys at 3 in the euro dollar and also the New Zealand dollar. New Zealand got strong an hour before 3, and the dollar had relatively no strength or weakness. So the New Zealand dollar is more than likely going up around 2, even before 3. We'll start with the euro dollar. So going up to 3 o'clock here, you can see this one is underneath the hourly moving average, which means it's more likely to trend down. Once it breaks above the gray hourly moving average in the middle, it's more likely to trend up. And I now have my work machine set up to show our 50 tick chart, which allows extreme high probability entries, and it lets you see the percentage of euro pairs on a tick chart that's going up. So let's scroll back and look at this at coming up to 3 o'clock. First of all, if you see a double bottom on a currency chart and drop down to your tick chart, you can see as this was falling on the 50 tick chart, about 75% of euro pairs were going down and or dollar pairs were getting stronger. And notice as it went up and came back down right here, right in this area right here, this is exactly what I meant by being able to time likely highs and lows of the market. Notice, decent weakness here, and then as it's going sideways right here, significantly less. So if you wanted to buy that breakout right down there, even before the currency meter showed the euro is getting super strong, you'd get in and notice, decent levels of strength there. And if you're just scalping this, you're in this thing around 85, comes up here and double tops. You can see a little bit less strength the second time. Notice significantly less strength than the first wave, and so you're out of this trade right here when it goes down, underneath there. That's about a 25 pip move, and it pulls back, and you can see obviously that this was a very strong move up. You might have re-entered right here. Here is the previous day's low, and we have the hourly moving average up there. If you didn't get out when the counter trend sell signal happened here, you probably did here when it double topped, and you can see the strength kind of fell off a cliff a little bit. So you're out of that trade there again for about 10 or 12 pips, on a scalping basis. And a lot of times currencies that hit the hourly moving average, there's some selling there, but when it breaks above there, it's a good time to go long. So let's say you bought this breakout right here, again at around 23, 25. It goes up and you can see some weakness coming in here. After your spread, maybe you lost 4 pips. Pulls back, previous day's low, which was a resistance area, is now support. And you can see there was a decent percentage of currencies, euros falling and or dollars getting stronger. As it's going sideways right here, the euro weakness and or dollar strength disappears, and oftentimes the second breakout over resistance is more high probability. So you might also want to give this a little bit more room to run. The last wave up was from here to here, so you have your Fibonacci profit target levels up there. If it has extreme strength, wait for the second fib target, and if it doesn't, get out at the first one. Now, the only reason I might hold for a little bit of a pullback is because, this market exploded up, had a lot of strength. Once it breaks above the hourly, it's much more likely to go up. When you're underneath the hourly, you got to, at any signs of weakness, get out because you don't know if the downtrend is going to resume. When it's above the hourly, you can give it a little bit more room, especially right in the middle of the range, right near the hourly. And one thing you want to do is put your stop underneath the area of the low by a few pips. Then once it makes a higher high and pulls back, you might want to yank your stop up. You might get stopped out with a 2 pip win and you have to get back in it. That's fine. Notice during this pullback, About 70% of euro pairs are falling and or dollar pairs are getting stronger. You might give an area like this 3 times to get broken, and if it doesn't, exit your trade with a small win, because you can always get back in if it breaks out a little bit later. So it's just kind of going sideways. I might get out of this trade right here at 34. We're in this trade right here around 25, up about 9 pips. You don't know what's going to happen after this. This might just be a false breakout above the hourly, and then it comes crashing down. And you can see a little bit of weakness right here. Came back down to the hourly. Now, because of the extreme weakness, I might not have bought this pullback right here. If it fell without that much weakness, you would have wanted to buy right here around 28. I want to wait and see how it handles the high, and if it breaks out through the high or kind of goes sideways for a little bit, you know, I might jump in on the trade. The longer it goes sideways, the better. We got about 45 minutes of sideways price action right here, and it really appears like now it's going to break out through the high, but just wait. You might as well wait for a few more pips up before you buy, just to avoid a loss if it doesn't take off. Alright, so you're in your trade somewhere around here at 39. 92% of euro pairs are going up and dollar pairs are going down. That's how, you know, accurate this is on the tick by tick basis. So this is probably, you know, here we're up at the fib target, but it's pretty strong. Shot through the first one. And, you know, you might get out of your trade up here at 47. You bought this at 39. You didn't make a whole lot of pips. In fact, seeing where that fib target is, more than likely we would have bought this breakout right here a few pips lower. You know, one way of getting your charts to show above and below what you can normally see on your chart is to go to the range here and put 15%, 15%, and it will add 15% to the padding, and we would have saw that fib target there. But, you know, 92% of the euro pairs are going up. I prefer to wait for a little bit of a pullback before I get into this trade. Let's get these fib targets off of here now. And if during a pullback you see very little weakness and on the way up it had incredible strength, that's a decent sized pullback to buy. You know, the longer the pullback the better, or the longer it goes sideways the safer it is. A lot of times you can take a chance on a scalp trade and risk, you know, 5 or 6 pips. So that's a decent sized pullback. You can see that, you know, it had moderate weakness initially and then it fell off a cliff right here. You might decide to go long right here and put your stop just a few pips underneath this low. You're literally, you know, with some brokers risking 5 pips. And if it goes back up to the high, which is up here at 50, you have a potential of 15 pips while risking 5. That's a 3 times bigger, you know, potential profit than your risk is. And notice 84% of euro pairs going up. And it looks like we might have got stopped out here. You lost 5 pips. Everything was looking strong. I wouldn't have, you know, expected that little drop right there. And anytime something happens that you don't expect, you know, wait for a little bit of time to pass before you get back in it. So I'm not buying any of these pullbacks before, you know, the market kind of consolidates a little bit. You know, very minimum of 30 minutes to see what happens. If it doesn't break underneath the hourly here, then you can consider buying it again. But, you know, notice all the choppiness that came in, up, down, up, down. You know, you don't want to get in trades like that. So now it appears it's strong again. You know, if you're on a scalping basis here, you put your stop underneath here. You know, we're near the high, so the profit potential is less if it comes up here and double tops at the high. So you're going to be more quick to move your stop up in this case if you buy it. If it breaks out above that level we're in, and you're going to move your stop up, you're going to lose 4 pips if you're wrong. And notice some weakness comes in. Anytime that happens, if it doesn't take this high out, I'm going to try to get out of this trade with 1 or 2 pips profits. Only 61% of euro pairs are going up. You know, at this point, you know, it's a 50-50 whether it goes up or not. Alright, so it's kind of inching its way up near the high. Not a super high percentage of, you know, about 70% of your pairs are going up. You definitely want to move your stop to break even at that point. You're not up much at all in this trade, and if it doesn't take out the high, you probably want to get out. and notice the counter trend sell signal right here. We might be out of this trade at 55 for another 10 pips. That's how you use the in a lot of these trades today. In the euro pairs, I'm sorry, yen pairs, were even more explosive. Let's look at the euro yen up near the high. This one kind of came up and triple topped up here near the high. Let's say you wanted to sell the previous day's low when it couldn't get back above it. Well, let's look at the 50 tick euro yen chart with our FX scalper on it plus the histogram. Oops, hold on a second. Notice if you see a double top right here and you go short and it's falling, and there's not a whole lot of strength right there, but you would yank your stop down, and then it falls down again and the bars go green right near the bottom. Pretty decent place to get out of that trade at 70. You're short up here around 20. You just made 50 pips on a counter trend trade up at the high. And a lot of times when the market kind of consolidates and doesn't have any kind of a pullback up, we're underneath the previous day's low, which is a sign of weakness, and you see it go up, pull back, go up, and you have a very narrow range right here. Another decent place to go short. Makes it a lower low, comes back up, you move your stop down above this little swing, and usually on the second wave, especially if it hits a monthly pivot level, any kind of support like this, installs and starts to go back up, you could be out of your trade here at 28. You're in this trade up there at 80 for a 50 pip move. And usually when you're trading with the trend, you want to wait for a two-wave move, to kind of get out. But notice how fast this is in terms of changing color direction. You're short, stays red all the way down, you're out. It goes red again, you're in. Again, if you're looking just plainly to scalp, 34 down to 19, another 15 pip move. Notice, it goes red very fast. And most of the time it goes red early on in the bar. Not actually, it doesn't flip to red all the way down here at 19. It might have been 21. Notice all these moves, especially when you're trading, with the direction. And notice as this is falling, decent high percentage, a little bit lower percentage, a little bit lower percentage. At some point, if it comes down, pulls back down to, where the Fibonacci profit target is, it's likely to potentially reverse. We have the whole number coming up right down there too. So let's see, this is coming up to where you think the low is. If it goes sideways for a while, usually you can buy the next pullback when it turns red. But notice this is about a 25 pip move up. And notice this red bar right here. Only one more euro pair was going down than up. And, not enough to really jig you out of that trade if you had went long. This is a very predictive tool for scalping and absolutely timing your entry with the absolute tiniest of pip losses if you're wrong.